Hi, welcome to the Forex Coach. This is our first video covering the topic, the basics of Forex. What is Forex trading? Forex stands for the foreign exchange market. It's the exchange of currencies globally. The market is absolutely huge at around $5.3 trillion, and in comparison to some of the other markets, you can see how the Forex market dwarfs the others. The most traded pairs of currencies in the world are called the majors. They constitute to the largest share of the foreign exchange market, about 85%, and therefore they exhibit high market liquidity. The majors are Euro US dollars Japanese yen, Pound US dollars, also referred to as cable, Aussie dollar, Dollar Swissy, New Zealand dollar US dollar, and US dollar CAD. The Forex market is open 24 hours a day, from 9 PM on a Sunday up until 9 PM on a Friday. There is no central bank in Forex, and the price of a currency essentially floats, with market makers setting the exchange rates. The Forex market also offers tremendous leverage, often as high as 100 to 1, which means that you can control $10,000 worth of assets with as little as $100 of capital. However, leverage can be a double-edged sword. It can create massive profits when you are correct, but can also generate huge losses when you are wrong. This is why risk management is such an important aspect of trading, and a topic that we will cover on a later video. The time zones of the Forex market are split up around the world. You've got the Sydney Open, 9 PM till 6 AM, Tokyo from 11 PM till 8 AM, London from 8 AM till 5 PM, and New York from 1 PM till 10 PM. As you can appreciate, the size of the London market and New York market is significant, and when these two markets overlap, that's when we get the most amount of price action and the most amount of liquidity in the market. So what is spread betting? Spread betting is a tool that we use to trade the Forex market. Spread betting is a tax-free way to speculate on the price movement of a financial market without actually owning the underlying asset. Instead, you predict whether the market price will rise or fall, and the degree to which you are right or wrong determines your profits or loss. So if we look at this graph, in this example it's Apple, because you can spread bet on a share, an index, a commodity or currency. So in this particular example, they're looking at a graph for Apple. This is the price and it's going up over time. If you bet £10 per point long on Apple, and long means you're buying, you're looking for the price to go up. Short would mean you're doing the opposite, you're selling, you're looking for the price to go down. So in this case, you're betting £10 per point long on Apple. Now you're buying here at this price here. The market price increases by 0.45 points. So it goes from 135.05 down here to 135.50 up here. So the difference is 0.45. You close the position for £300 profit. How's that calculated? Well, it's £10 per point times 30 points, which is the difference between these two. Now you may be asking, well, that's not right because the difference is actually 0.45. However, the next point that you need to take into account is the spread. Now the spread here, you can see the difference between the buy price and the sell price, 0.05 and 0.2, that means the net difference is 0.15. This is obviously the expense of trading, and it's called the spread, hence spread betting. And this is what you would pay to the broker effectively, and that's how the brokers make their money. So in order to spread bet, you need a broker's account. Now the top four, this is just a general summary off the internet that someone has ranked the top 4 brokers. Whether this is the case with these brokers, I don't know. I do know something about IG. I've used them in the past, but I wouldn't necessarily recommend them. ETX Capital, I have got an account with them, so potentially that could be an option for you, but really you need to do your own research. We will recommend a brokerage for you to get started, which is very user friendly and has a very good trading platform. That'll be in our next video, and that's FXCM. However, you need to look at what you want to trade and look at the different brokers that are available to you and decide whether they are right for you. So one of the important aspects as well, just when choosing a brokerage, is looking at the charting package that they offer if you're going to use the broker's charts. Whether there's something that's compatible with your computer. If you're on a Mac, it may be something different to if you're on a standard PC. So these are certain things that you might want to look at, but again, we'll cover this at a later video. So the range of markets offered by brokers, some spread betting companies focus on tight spreads but on a few key markets, while others focus on providing a good value overall service and a wider range of markets available. I think IG is one of the biggest. They offer a huge amount of markets that you can trade on, whether it be stock markets, indices, individual stocks, currencies, commodities. You can even trade Sunday indices with IG, but that's not necessarily what you're looking for, so you need to decide what you're going to be trading, and again, this is something we'll help you with at a later video. When opening a new account, you need to have in mind what assets, as I've already said, you're gonna trade, and it may be beneficial to you to actually have two accounts. And this is something that I recommend. So don't just focus on one account. If you're trading two different types of strategies, i.e. swing trading, which is more longer term, and then day trading on another account, you can separate these. And that will mean that your money is secured in two different brokers. So if one of them had an issue, you're safer. And also it would mean that you've got the options of different products on different brokers. Also bear in mind, something that I'm a keen believer in is not putting all your trading capital in your broker's account. As we all know, there is insurance. They are held in a bank account for you with these brokers that is held on your behalf. But if one of the brokers went under, which is a possibility, then you could have problems getting your money out. So you don't need all your trading capital in your broker account. You just need enough to enable you to trade the way you trade at the correct risk without getting margin called, without having any margin issues on your account. And again, this is something I'll cover in a later video. So when you're trading, one of the things to bear in mind just with regards to the brokers is there are things called problems that you might have when trading, such as slippage. Now, certain brokers may be worse than others for this, and there's a lot of bad press that certain brokers have got, such as IG, FXCM, some of the bigger ones. They've been caught out in the past where they've kind of not given the best service to their customers and maybe not had the customers' best interest at heart. But this is just part of trading, unfortunately, and some of the risks that we have to manage, which we can come on to in a later video. So slippage is basically where you will have a stop loss in place, but the price will fall through your stop loss, and basically rather than getting your stop executed at the value you set it, you'll get a worse price and therefore lose more money than what you originally set it to be. The same with spreads as well. They can widen their spreads if there's market volatility, if there's a big news event, or even at the end of the trading day. You've got to be very careful, because all of a sudden what was a 2-pip spread can turn to a 20-pip spread and thus cause you to get stopped out and have a losing trade, which potentially could have been a winning trade. So most people actually do lose money while trading. I don't know if you've heard this before, but it's a common fact. There's different ideas of the actual percentage no one actually knows, because there's so many different brokers, but it's somewhere between 5% and 20% of traders that are actually profitable. All the rest lose money. Now, the key for you is to try and be in that 5 to 20%, which you can do with our help and support. Some of you reading this or watching this, you're going to lose money. That's fact. You are going to lose money. Some of you are even going to follow us and do what we tell you to do, but then still make tiny little mistakes and then go off on a tangent and still lose money. But the key is to be disciplined. It really is with trading. There's loads of stories out there, people that have lost money, people that have then lost money and then, you know, it's taken them 5 years to get it back and become a profitable trader, etc. But we're not going to go into that. All I'm going to say is stick to what we teach you and be very disciplined. You need to almost be a robot when you're trading. Be emotionless almost, and that is one of the psychological aspects of trading that we will come on to later on in a later video. But just go through the statement. I'm sure that you've read somewhere that most traders who spread bet lose money, but what is the main reason most spread betting clients lose money? The answer is pretty simple. It involves around getting involved in something without enough experience. Spread betting is not an easy way to make money and should not be marketed or promoted as such. It is a facility to bet on the financial markets to be used appropriately. Most brokers do a good job of ensuring their clients have some investment experience before allowing them an account, and they will ask you some questions when you do sign up to open an account. The key for us is risk management and trading sensibly. If you're watching this thinking I'm going to get rich and I'm going to be leaving my job in 6 months or a year's time, then you need to stop watching and go away and look at something else, because this isn't for you. This really isn't the case. You're not going to become a millionaire in a year's time, but you will be able to build a consistent profit, a consistent trading account, a consistent amount of capital that you can then scale up and reinvest. And that's the key. We offer a trading signal package, which means that we're going to take a lot of the risk out of it for you by you following our specific trading strategies and systems, which you can find on our website by going to theforexcoach.co.uk. You'll see the link there, or you can follow us on our Facebook page where we will post trades and things on there. Our next video 2, is going to be how do I set up a broker's demo account. Now, we recommend you starting a demo account. It's not real money, it's not going to cost you a penny, and there's zero risk from your perspective from losing money. So we're going to go through that in the next video, and then hopefully some of you guys can get started. Hope that helps. Bye bye.